Today on Forbes, the Iran war has sent airfares climbing. Here's what to expect. As of mid-March, U.S. airline executives say higher fares due to the Iran war had not dampened demand for tickets yet, but analysts say that could change with a protracted conflict in the Middle East. Looking at the ticket sales for the 6 largest U.S. airlines, the average transaction grew by 2% with American Airlines to 16% with Delta Airlines for the week ending March 8th compared to the previous week, according to new data from Consumer Edge, a provider of consumer spending data. Speaking at a J.P. Morgan investor conference, executives of major U.S. airlines agreed travel demand remained robust enough to offset much of the huge spike in jet fuel prices caused by the war in Iran. Jet fuel typically accounts for 1/5 to 1/4 of airlines' operating expenses, which was $3.93 a gallon on Tuesday, March 17th, on the Argus U.S. Jet Fuel Index. This is up 57% since the U.S. and Israel began airstrikes on Iran on February 28th. Several executives suggested travelers are locking in summer airfares now before rates climb further. Current strong travel demand may be temporary, driven by consumers booking ahead of potential fare increases from rising jet fuel costs and a short-term boost from tax refunds, according to Jeff Window, senior analyst at Edward Jones. Window wrote, quote, "If oil prices remain elevated for an extended period, travel demand could soften as inflation further constrains consumers' disposable income." Michael Gunther, Senior Vice President of Research and Market Intelligence at Consumer Edge, told Forbes that a stock market drop could also dampen demand as higher-income consumers' confidence affects their discretionary spending. Instead of raising airfare prices across the board, airlines may decide to hike some fare classes, such as premium and business class, before others. Legacy airlines like American, Delta, and United attract higher-income, less price-sensitive customers than budget airlines. Delta CEO Ed Bastian stated that the upper arm of the K-shaped economy served by Delta remains strong and is, quote, "a bit immune to what goes on with geopolitical events." However, Katie Nastro, spokesperson for the flight deal company Going, told Forbes that while U.S. airlines want higher prices, they, quote, "can't just go out and start charging 20% more, 30% more." She added, quote, "I don't think we can assume premium travelers are just going to eat up this additional cost and lie down and take it." For now, U.S. airlines are operating with their schedules mainly intact from before the war. But if the Middle East conflict continues, domestic carriers may begin to rein in capacity to offset their increased costs from jet fuel prices. Around the world, some carriers have already begun cutting flights. Scandinavia's SAS said it was planning to nix roughly 1,000 flights in March and April. Air New Zealand announced it would reduce capacity by 5% through early May, and Vietnam Airlines warned it soon may have to scrub flights from its schedule. The uncertainty that hangs over all of this is that we don't know how long the war will continue. Window, the Edward Jones analyst, wrote to investors, quote, "The duration of the Iran conflict will be a key factor for the travel industry. Airport delays associated with the partial government shutdown, ongoing headlines about geopolitical tension, and rising costs all have the potential to weigh on consumer sentiment and discretionary travel plans." For full coverage, check out Suzanne Rowan-Kelleher's piece on Forbes.com. This is John Palmer from Forbes. Thanks for tuning in.